It's Arjun Paliwal here, your host of the Investigate podcast, and today's episode I'm joined by Eva from Finni. Now, Finni specializes in helping investors specifically, whether it be complex loans, your first-time investor, to actually start or scale a portfolio, but the right way. And why that's important to call out is that there are many brokers across Australia, some who specialize in certain things, some who are trying a little bit of everything. And unfortunately, when you've got the broker who does a little bit of everything, it does mean that their knowledge of certain investments, certain strategies, and certain thoughts aren't quite the same as someone who's more investment specialized. Well, that's where Eva joins me, and she's going to be sharing a few of the common mistakes that first-time investors make, as well as even some of the extra things that she does when she goes to thinking of servicing to help borrowers get ahead. Now, when we go into it, first thing I noticed was Eva remains solution focused. And that's a big key when you have a broker on your team, because you don't want them just thinking of today's scenario. You want them thinking, if you do X, you could get to the other scenario. If you go do Y plus X, then maybe a few years later you can get to that scenario. And I think that's a very underestimated tool, because when you think of portfolio plans, most of us, if not all of us, cannot have the portfolio of our dreams based on the borrowing capacity we have today. So suddenly when you buy one place or two places and you think that's over for you, it's usually not the case. It's about, it might be over for you today, but then what does it take to get there tomorrow or the day after? And so that's the kind of vibes we've been getting from Eva, not only just having her on the show, but actually working with her alongside many of our clients who use her services at Finni. So have a check out of this episode, and of course, reach out to Eva if you'd like to have a chat with her about your finances and go from there. Thanks again, and see you on the other side. Eva, welcome, and thank you so much for coming on today. I know in the space you're in with Finni is an investment specialist in terms of the mortgage broking world, but I guess many people out there who are thinking of taking on a broker to support them or have one already, they may not know the difference between someone who's an investment specialist and someone who's more generic. Could you help clear the air on this to let us know what the core investment specialist part means with yourself and Finni?
Yeah, perfect. Yeah, thanks for having me, first of all, Arjun. It's great sharing a bit of knowledge here. So, yeah, I think that's a really good question, actually. A lot of our clients just seem to not really understand the difference or what it would mean for them to really use a specialist in investment lending. And I think the difference really will come down to probably 6 months, a year, 2 years down the track, when they realize, when they do their tax return, or when they want to get cash out of their property to buy a second investment, or recycling equity, getting cash out, LMI, all these sort of things. That's where they realize maybe they should have used someone that knew about the structure of their loan and how to do it so they can keep investing and keep building wealth. There is a lot that can be involved into investment. So it's very important that people understand the structure of what's been happening and what will happen, so they can really achieve what they are trying to do.
And on that note of, like, I guess, people thinking of that expansion, there's also many investors who make mistakes and probably have put blockers on their way to expansion.
Yeah.
And as we know, finance is where things start, not property. So when it comes to finance, what are some of the common mistakes you see investors make blocking themselves from going ahead to more properties?
Yeah, so there's a lot of that actually going on, and it's something we try to fix a lot. So that sort of goes back to your first question, where people get stuck because they haven't used finance properly in the first go. I see a lot of young investors especially use a 20% deposit on their first property. So that's pretty much all their cash. They've been saving, and I guess they're quite proud that they have so much available. So they put everything into the one property. Often they buy that property themselves, so they haven't really got much help or advice on it. And it could be a property that doesn't grow too well, or doesn't have much yield, or sometimes doesn't actually settle for a year or two because it's an off-the-plan property. And then they're stuck. They just can't do anything anymore. So that's where they also need to get to Finni or an investment lender that can help them to structure their loan properly from day one. So in 6 months' time or a year time, when they're ready again, they can go again. And we make sure that we are not just focused on that one line. We need to think about the whole story behind it and what people are trying to achieve in the next 3, 5, 10 years as well. So
that's a really interesting point you raise, especially on the LMI part, because LMI versus deposit part, I mean, right?
Yes.
For many years, and it's been something that even I remember going back to 2011, back in my banking days. I remember since back then, people used to feel the 20% number was always what you needed. And it's something that still remains a problem, because let's just take cities like Sydney that have a median price of like 1 million. And when you think of that 1 mil plus, the 10% versus 20% is an extra $100,000.
Yes,
and
plus
so,
then duty, plus cost, plus everything. It's a lot of money. Yeah.
And $100,000, if you spread that on like a 35K per annum savings, right? Which is, by the way, not a bad saving, 2 to 3K per month. That is 3 years. Someone's hanging back whilst prices could be rising for 3 years, and they keep trying to chase their tail. Whereas someone who says, hey, I know LMI comes at a cost, but that cost could represent 2-3 years of saving, could represent 1 year of growth to easily make up for that cost.
That's right.
And then you feel so glad that you got in 2 to 3 years earlier.
Yeah.
That must be a regular conversation you're having, right?
Yeah, it's an everyday conversation. And I think people just don't realize that there's a cost into obviously paying an MI, but there's also a cost of putting that money into one property. It's tied up, and you can't have maybe that second property already today that will do so much better than paying $10,000 of NMI or whatever it might be. And often that's the difference between doing just one property now or 2 in the first year of your investing. So it's a huge difference. And there's even lenders today for investors that will accept only 5%. So you could get in a lot quicker than what you think often.
Yeah.
So I think it's very important that people understand that. And the other thing is LMI is tax deductible when it's an investment property. So it's not such a big cost that's, for nothing. And I think it's not, such a bad thing. And people tend to think that it needs to be avoided, but go for it. It can get you in the market today. So...
And I believe there's a few professions as well that actually don't even pay LMI, right? Could you name some of those professions that get that benefit?
And traditionally, doctors, lawyers, accountants, sports professional. Very recently, St. George, for example, opened up the LMI waiver to nurses, which is great.
Ah, good.
So yeah, there's ways around it definitely as well for some professionals.
So now I wonder, maybe, when all the parents are saying, hey, go be a doctor, go be a lawyer, go be this. At first I was thinking, are they just saying that for other reasons? But now I get there's LMI benefits too, right?
Yeah. Yeah.
Thank you, Indian parents out there, for pushing, because now we all get LMI waivers for those who did it. Not me, but for those who did that. So when it comes to the servicing, we talked about investor mistakes, but servicing is on everyone's mind right now. 30% drops in borrowing capacity, some more, some less. And I think when you're talking about specializing in helping investors, that must be such a big part of the, Rubik's Cube or problem that you need to solve. How is it that you're facing these challenges and going through them? Because you're helping many investors not get just one property, but 2, 3, 4. Could you tell us some more inside info on that space?
Yes, I can. So I think there's a lot to do with thinking outside the box on that one. So it's not just, okay, I'm buying my, let's say, third property, how can I finance this? But instead of just doing that, is looking at everything you have, whether it's home loans, investment loans, credit cards, car loan, HEX debts, your budget as well. How much you spend every month is quite something into getting a home loan. So there's sometimes
Uber Eats, right?
Yeah. Yes, but there's some costs that could be reallocated to other things in your life. For example, insurance sometimes can be reallocated to your super and can drop a few $100 a month in your spending, which sometimes can help getting that line. So we try to see, the whole picture, whether it's debt consolidation, refinancing the whole portfolio to 30 years to increase your free cash every month, budgeting. If that doesn't work, there's also, we can provide a bit more insight on how much people will need to earn to just be on that number that would be magic and get to that next property. Also, people need to stop thinking only the big 4 will help them, there's a lot of other lenders that can do so much more. So we need to be open to that. And even if the rate is a little bit better or a little bit higher, getting a property will, outweigh paying an extra 0.5% or whatever it might be on your home loan.
What's very interesting is that your approach to it is more solution focused than it is like, pointing out the problem. Because I think with borrowing capacity, many of the non-investment specialist brokers will say, this is your borrowing capacity, and that's it.
Yeah,
then others will say, Bank B says this and Bank C says this, and that's it. That'll probably be where it stops. Whereas what I'm listening is very different to that approach. It's more like, well, firstly, let's take a step back and audit what you have, right? Can we change habits, behaviors, things? Secondly, it sounded like, hey, not only thinking about you and your position today, what if you look back at your last 5 years, was your income the same last 5 years? It probably wasn't for many people, right? And you've talked about what income does it need to get to this? What income does it need to get to that? And then you've also talked about not thinking just short term with interest rates, but thinking more, do I get this place and what difference does that make? So I can already sense that investment thinking and approach coming along, because that's many things that people don't often consider. And so I guess maybe when you start to think of your most successful clients, the ones who've gone and said, we've done property 3, 4, 5, 6 beyond together, Eva, and this is working really well. What are some common traits you notice of those who do scale their portfolio together with you, that whether it be mindset or their financial position or something they do that you go, oh, I see this commonly in very successful investors?
Yeah, the mindset is, I think, something very important, and I guess number one into successful people in general in any area of life. Yeah, people that have grit and passion and don't take no for an answer, basically, and just keep going. And if you get a no somewhere, there's someone else out there that probably will say yes. So you just need to keep going. Probably haven't knocked on the right door, I guess. And so that's, mindset is definitely number one. I think it is also some sort of belief out there that to get rich, you have to be rich. And that is something people need to scrap. That's so untrue. As you said, people can save maybe $2,000 a month, get, to a deposit of $50K within a year or two, and then that's enough. They can start with that. We even have solutions where you don't even need any savings. You can just use the equity someone else has if they're willing to share that with you. So that's definitely a mindset there. Also, I find those people talk about money. They're not scared to share what they're trying to do and get experience and knowledge from, whoever has done it before around them, whether it's their friend, family, colleagues. And I guess doing this, they actually get around them a really good team of professionals, whether it's the broker, the buyer's agents, the accountants, solicitors, financial planner, whoever that might be. They seek advice and they get it and then they act on it. And I find that's definitely where people, it makes a difference. And I think also they need to understand that whatever you're doing today, it's probably easy for most people to get into that first property. But to get to that second and third, that's where you need to actually plan and set goals and a structure into your lending so that will allow you to do that. If you make the mistakes now, and I'll go back to the first question you had, Arjun. If you make mistakes today, it will make it so much harder later. So get advice today, make it right today. Even if it takes a bit longer, do it today. So I guess that's a common trait. People just want it and will get it. Definitely mindset of growth there. Yeah.
Well, funnily enough, there was this video I saw, very successful entrepreneur by the name of Alex Hormozy. And he said 3 things. There was, firstly, there were successful people that drank Coca-Cola, had fries and hamburgers. There was also successful people who were super fit and had all their morning routines and everything. And he felt advice was conflicting, right, on what made those successful business people, investors, whatever you want to call it. But then he said there was 3 common traits. And the 3 common traits were, number 1, they feel that they deserve more or deserve better. And so that kind of speaks to the whole not taking that for the answer, really feeling that they can get ahead, they want more, they're going to get more. The second thing that he spoke about was that they felt like a little bit insecure, like they always needed to do more to get ahead. And I guess, they always felt like they were being looked at, but almost not successful enough. And it kind of pushed them to keep doing more. That was the second thing. And I think the third one, I'm just trying to recollect it. The third thing he said was that they're really good at focusing at one thing only for a certain time and just focusing. And so there were a few key points of those three that came up in what you said as well of that successful investor. And so I think there's definitely some similarities there from those clients that you've definitely looked after. So really interesting to hear. Now, when it comes to people reaching out or wanting to look at scaling their portfolio, how can they get in touch with you, Eva? Because I know we've worked together with a few mutual clients and they've had nothing but good things to say about you. How does that process work in terms of getting in touch with you?
Yeah, very easy on our website. So it's finni.com.au, finni.com.au. There is a page where you can just bring your details, your number, a bit of details about you if it's a complex, scenario that you've got. And we would be in touch with you, book an appointment with the best, broker there to suit your scenario and get it sorted. Yeah.
Awesome. Now, I have one last question. If people were to work with you and you want to make sure that it's the best for them in terms of the relationship and working together, what do you find is the customers who have the speediest, easiest, best solutions commonly do? Is it like something in how they give you the paperwork, or is it the communication style? Because we want to set up people for success, right? If I think of people who often, want that portfolio, they also want things to be seamless. So what do you reckon is the things that your most seamless customer experiences have?
Yeah, look, communication is essential into everything. So that's definitely important. At Finni, we actually use very good software that's extremely easy for people to use. We create a platform for you where everything is listed as what you need to upload, your payslips, your ID, your statements, whatever it might be, and a bit of information. So as long as people are happy to use the computer to upload information, it can be done in like 15, 20 minutes. We get everything and then we sort it out for you. You've done your homework. So as long as people can do this and can do it in one go, I guess, not drip things, that would just make it easy for them, for me, for the lender as well that we go through, because everything is there ready to go. It can be done quite easily. I guess COVID helped in that sense that we couldn't see people face to face. So we do have ways to do it quite quickly remotely now, which helps. And
now we just need the banks to come to the party, because once all the banks come to the party and they say, hey, every offer document, e-sign, no lawyer stuff needed that needs extra signatures, I think then that's a big win for the industry when the day that happens, right?
Yes, it's coming, I think. More and more are doing it, but we have to thank COVID for that. It wouldn't have happened so quick if we didn't have COVID. So it's coming, I think, more and more. We can even sign some mortgages now electronically. So it would make things so much easier and quicker, and we're not going to miss settlements anymore.
Well, in saying that, I'm already recognizing how horrible my handwriting is now, because the couple of years of the Zooms and e-signs, I'm trying to write stuff and, I'm writing things like a doctor, but definitely not a doctor in terms of what I do. So
what am I waiver for you?
No LMI waiver for me, unfortunately. Hey, if any banks are listening to this podcast, us buyers agents would love a good LMI waiver. If you chuck in us in that thing, we're very pro-property. We love property. So hopefully we can find us an LMI waiver. And if there's any other industries out there, do a shout out as well to your banks, and hopefully they listen. So thank you so much, Eva, for your time today.
Thank
you. A couple of big takeouts I took were just really about bringing things forward and faster when it comes to the deposits. LMI can be your friend. And then more so just having that investment specialist broker in your team that's solution focused, not just this is your capacity and move on. And it very much seems like you're thinking of the customer, not just today, but years ahead. What could their income be? What could it change to? So thank you for that. And we'll catch up soon.